Why do we have this account over here? Why is it invested that way?
Mm-hmm.
A lot of people don't know. I don't know. It's where the broker put me. Really? I mean, that's
the answer.
80% of the time, that's the case.
Right.
But they should know why they have this account and that account. And, do they need money safe?
Mm-hmm.
Right? Do they want money safe? How much should they have safe? Or should it all be in the markets?
Right.
And if it's in the market, any of it, how risky do they want to be with it? And that's just the investing portion. Again, there's other areas of financial planning, estate planning, tax planning, income planning.
Welcome to today's Retirees with Certified Financial Planner Wayne Maslyk of Great Lakes Benefits and Wealth Management. Anchored in family values, Wayne offers practical advice to help you get the most out of your retirement years. For more information, visit today'sretirees.com. Now, here's your host.
And welcome to Today's Retirees with Certified Financial Planner Wayne Maslyk of Great Lakes Benefits and Wealth Management. On today's program, I'm going to be honest with you. I don't know. Wayne sat down here and he gave me a blank sheet of paper. Normally he gives me things to talk about and where we're going, but today he gave me nothing. And when I ask him, all he does is smile. So let me ask the first question.
Yeah.
I'm going to be a smart aleck.
Uh-oh.
With the economy in the shape it's in, gas prices are now $4 a gallon almost.
Yep.
And inflation is going up, but our 401ks and those kinds of things that we have in certain areas, they're still sort of holding steady right now. Should we be concerned?
I don't know. That's what we can talk about today.
Okay.
And that is, I don't always like to come up with topics that are on my mind. I try and feel out what's on the people's mind, what's going on. And there's a lot going on right now, more that I could remember all over the place. So, you talking to your friends or family or even yourself, what's on your mind these days?
Sure.
What are you worried about or thinking about regarding anything?
Well, the as you is in the news everywhere. Inflation is. They just said it was 5+%, almost 6%. In certain areas, it's even more than that. If you calculated inflation the way they used to calculate it 20 years ago, it was probably even higher than that. And most people that I know, we're paying more for things, but our savings are not keeping up. You're still, if you have just a standard CD or something like that, they're still paying 0.4% or something, hardly anything.
Yeah, they're not, it's not immediate changes when you have inflation, as far as interest rates following. So two things on that topic. A lot of experts feel that inflation is transitionary right now, temporary.
Okay.
Because of the supply shortage, because of the labor shortage, transportation shortage. I just read today, this will air in a few days or whatever, but, the transportation secretary is on leave, and it's been on leave since August.
Oh,
during all this.
I didn't know that.
You believe that? I couldn't believe that when I read it. It's
Wow.
like, right when you need the person the most, and they're I don't know, I'm sure they have people under them, but, the Cleveland Fed is a very respected bank, and their view on things is this inflation is temporary, literally only through fall, early part of winter. That's good if they're right.
Sure.
Now there's other experts and trusted banks that are saying it could be longer.
Right.
That could be bad. If we have inflation, you definitely want to hope for interest rates rising. Right? Because like you said, you'd get higher rates of return on your savings and CDs, fixed annuities, those types of things.
Sure.
Even your checking account, money market accounts. So that's a good thing if that happens. I mean, if we have inflation and we have interest rates going up, savers are going to want that. And I'll give you an example. Let's say a person or family lives on $50,000 a year.
Okay.
And let's say we have a sizable piece of inflation percentage-wise, 3 or 4%.
Okay.
So at $50,000 a year, and they get a 4% increase in costs, that's going to cost them $2,000 more to live, right?
Sure.
This show is today's retirees, right? So we're talking about retired families and retired families that have saved, 401ks, savings, so they have a nest egg. So if you have a person that invests in safe money type investments, CDs, even government bonds, fixed annuities, those types of things, if they're getting 2 or 3% now, say on a hunk of money, let's just say 200,000. They get 200 grand in a fixed annuity paying 2 or 3%, or a CD, right? And we have inflation of 3 or 4. Well, that 200 grand now is going to pay them, say the interest rate goes up 3, an extra 6,000 a year.
Oh, okay. I see where you're right.
Their cost of living only went up 2,000 a year.
Okay.
So they're $4 grand ahead of the game.
Sure.
And that, a lot of people wouldn't mind that,
right.
Paying a little more for gas and that type of thing, when they're going to pocket an extra, $4 grand in that example. If they have $500,000 in safe type stuff, or 400, it's even multiplied, and their cost of living is only 2,000 extra.
Right.
And the inflation we're having now, it's not across the board. Gas, food,
right,
some appliances, but not everything is going up as much as those are.
Sure.
But yeah, you're right. If interest rates don't follow, and they're not supposed to follow either. I mean, everything I've read and the people I trust, they're talking 2023 before the Fed starts to relax things and lets interest rates creep up.
Sure.
But if we have inflation prior to that, and the rates don't go up with it, some people just be paying more to live.
Sure. Yeah. And those folks that are, that have their safe money, the CDs, these kinds of things where, you're having, is there anything they can do to maximize that, or are they just going to have to sit on the sidelines and wait?
Well, they have to do their homework. I run into a lot of people that come into my office and, they have money in a 1% CD, when we can get them safely 3 or 4 or more.
Sure.
So it's costing, per 100,000, they're giving up 2,000 or 3,000 a year in that example.
Right.
So they got to do their homework. They got to work with a professional, a fiduciary, somebody like me that has to do what's in their best interest. And we shop, an independent.
Sure.
I'm an independent, so I could go to any company out there and shop rates. I'm not tied to the company I work for or the bank I work for, and this is the rate and that's it. So we go to market and find the best rates for our clients. Sure.
And friends, that's, as we talk through this program, these are the things that we need to keep in mind, even though the economy looks different. And this is the thing, if you've watched the program for very long, and I would encourage you to go back and look at some of the past programs, one of the things that Wayne has said throughout the years is whether the economy is going up, interest rates are going down, there's ways for you to be fine if you do it right.
Yeah. And when we come back here from the break, we'll kind of move on to the original question about the markets. Okay. We just talked about interest rates and inflation, but what are the markets doing in this environment?
Sure, absolutely. Well, you sit right there, call your friends. We'll be back right after this.
We've all heard the word rollover when referring to an investment account at work, or your 401k, your 403b, your 457 plan. What do you do with that when you've left your job and your 401k or other retirement plan is still at your old employer? Or what if you've retired? One thing you don't want to do is you don't want to leave your money, your retirement account, in your employer's 401k. Quite frankly, your old employer or current employer is the boss of your retirement account. So if you have questions about what to do with your rollover, you roll it to Wayne. Get it in your own hands, where you have the whole universe of investments and choices, not just what your employer tells you can pick from. So contact my office for a free consultation on how to roll over your old retirement account.
Welcome back to today's Retirees with Certified Financial Planner Wayne Maslyk of Great Lakes Benefits and Wealth Management. As we get in today's program, let me encourage you to go to Wayne's website at todaysretirees.com, todaysretirees.com. On that website, you can sign up for Wayne's free newsletter. It doesn't cost you anything. Just fill out the form or call the office at 866-626-3990, and they'll set you up to get that, which is you send that to me, and I enjoy reading that. And my wife has tried some of those recipes that you put in there from time
Yeah, I
to
hear
time.
they're pretty good. Yeah, the girls do all that homework, but and on top of that, and this isn't something we give out free or to anybody unless they're an investment client. People that do have money with me in the markets, my managed portfolios. In addition to my newsletter, they get an investment letter every month.
Sure.
And the investment letter is, more detailed, talks more about the economy in detail, taxes, the markets, and it's newsletters, little foo-foo recipes in that,
Yeah.
some things about my personal life and family, and but the investment letter is just a little more nuts and bolts.
Sure. But even the newsletter, I mean, you have little nuggets in there. If a guy,
yeah.
if you're reading it.
Well, I write a personal message
Sure.
myself in that newsletter every month.
Right. Let's go back to our original question when we started today's program. The economy right now, depending on who you listen to, it's either in shambles or it's definitely volatile.
Yeah, I mean,
it's all over the board.
You look at the market, and if you have money, we talked about safe money and inflation here a little bit ago, but if you have money in the market, you're doing well right now. You're making a lot of money. The money that you're making is, the inflation we're paying for an extra steak or gallon of gas is nothing compared to the profits in the markets right now.
Sure.
And the S&P is hovering around 4,500. That's the true kind of gauge of what the companies in the country are doing. They're top 500 companies. And it's all good market-wise. Now, not all companies are doing good. When you see the S&P going up or down, it's not all 500 companies.
Right.
It's generally 20% of the 500 companies are what drive that S&P number.
Sure.
So there could be, a bunch of companies not making money. That's the risk of individual stocks. You might not be in one of those stocks that are making money.
That's why the mutual fund, if you're going to be in there, is a good choice.
Well, mutual fund's a good choice for more diversification, less risk, less volatility. Individual stocks are fine if you're well diversified.
Now, when you look at what is happening, like we talked about inflation, but the market is doing well. Those folks that are retired, they may have $500,000, $1 million, in different portfolios, and they're sitting. I'm sure there's some apprehension. They're sitting here and they're looking at this and they're saying, well, is there concern, or should we just sort of ride?
Well, there's a lot of people that have concern. I mean, the market's at record highs. So a lot of uncertainty out there. We haven't had a true long-term bear market in a long time, so we're overdue, and it's coming. It's what the market does.
It always comes, right?
It always does. History always repeats itself regarding the markets. Yeah. You just have to be positioned at that time to take as much of a hit as you can stomach.
Sure. Without
panicking or changing the game and, letting your emotions get involved.
Right.
We talk about a safe risk ratio all the time, and every family, every investor should have one. So much in safe, whatever's appropriate for them, and you take risk with the rest. And the fear right now is the inflation, which, if it's continuing in longer term, will most likely lead to a recession.
Sure.
And there's a lot of variables out there right now, with the COVID even.
Yeah, exactly.
Yeah.
Now, a couple of programs ago, we talked about the real estate seems to be on a just going straight up.
Oh yeah.
It's just going crazy. So if someone who is retired and they're thinking about or they have a couple of properties or something and they're thinking about this, do you think that now is the time, or do you think this is going to continue going so that they can wait 6 months or a year?
Nobody knows. I mean, and it could drop back quick.
Sure.
It doesn't happen gradually, typically. And now's the best time to sell. So now's the best time in a long time. If you had plans or thoughts of selling, you want to sell now. With the exception if you're going to buy.
Sure. Okay.
Right. If you're going to sell now and get a high price, you're going to pay a high price for your new property.
Right.
I tell clients that are willing to do it is, you sell now ideally, and then you rent for a while until the markets come back in check, whenever that comes, and then you go buy lower.
Sure.
Same with used cars right now.
Right.
Right. If you can do without your late model used car, and you get top buck right now.
Yeah.
Big money, $5,000 more on average than you did 6-8 months ago.
I have a friend. I was going that whose neighbor has a late model Chevrolet pickup truck.
Mm-hmm.
The dealer called him and said, I'll give you $5,000 more than what you paid for it 2 years ago.
Absolutely. Yeah.
He said, I'll do that.
Yeah, but he ain't going to find a new one.
No.
Unless you get lucky and a dealer happens to have a model.
Right.
I mean, they're still selling vehicles. You go by any car dealer right now, it looks like they're out of business. But there's a lot of people ordering vehicles.
Sure.
They're selling them. It's just they're not here yet.
Right. Yeah, they're sitting on a tarmac somewhere waiting on a chip from China or Taiwan or somewhere. Yeah.
Crazy.
It is crazy. And these are, you've been doing this for how many years?
25.
25. Have you ever seen anything that's crazy?
No one's ever, we've seen the real estate market, like this, 20 years ago. We haven't seen the used car market like this, and we haven't seen a shortage of supply like we have now.
Right.
Regarding automobiles and other things.
Right.
I mean, even a hot tub. We just bought a hot tub, and you're waiting months for it.
Yeah.
It's crazy.
Right. Yeah, it is crazy.
Yeah.
It is. Well, friends, we have to take a break. Stay right there. Go to Wayne's website, todaysretirees.com, todaysretirees.com. And let me encourage you, if you have concerns, Wayne will be happy to sit down with you and talk with you. And if you're invested somewhere else or you're doing things, he would be happy to do a second opinion and look over what you have and what you're doing. He has said that through the years as we've done this program. So you take the time, go to his website, todaysretirees.com, or pick up the phone at 866-626-3990. We'll be right back.
A certified financial planner is a true professional, a well-rounded, holistic planner that helps you in all areas of your financial life. Estate planning, tax planning, financial planning, insurance planning. We have to sit for a 10-hour, 2-day exam, at least back when I took the test. It's not just a weekend designation where you go somewhere for a couple days, pay a couple $100, and now you have letters behind your name. One thing I think is important is that you try and find a independent certified financial planner, somebody that doesn't work for a big firm. I myself own my company, Great Lakes Benefits and Wealth Management. The buck stops with me, an independent, certified financial planner, one of the only ones on the north coast of Ohio. We've all heard the word rollover when referring to an investment account at work, or your 401k, your 403b, your 457 plan. What do you do with that when you've left your job and your 401k or other retirement plan is still at your old employer? Or what if you've retired? One thing you don't want to do is you don't want to leave your money, your retirement account, in your employer's 401k. Quite frankly, your old employer or current employer is the boss of your retirement account. So if you have questions about what to do with your rollover, you roll it to Wayne. Get it in your own hands, where you have the whole universe of investments and choices, not just what your employer tells you can pick from. So contact my office for a free consultation on how to roll over your old retirement account.
And welcome back to Today's Retirees with certified financial planner Wayne Maslyk of Great Lakes Benefits and Wealth Management. Today we are tackling some of the topics that are prevalent in our society. You should hear what goes on when you're not with us, when behind the scenes. someday we'll do a behind-the-scenes show.
Yeah, it'd be nice. I doubt if it'll ever happen, but make calls, take
Yes,
calls.
absolutely.
I'd like. I know what people are worried about, and I am going to get on a couple of those topics here in a minute. I wanted to see what was on your mind, but it'd be nice to be able to take calls. I love talk shows, and
Sure.
But, you got to have a good call screener for
Right.
some callers.
Exactly.
Dump button and all that stuff.
Right.
So people have been concerned with inflation. People have been concerned with the markets. I do have a lot of clients wanting to tone things down a bit. If they're an aggressive portfolio, tone it down to a moderate portfolio.
Okay.
If they're in a moderate, tone it down to a conservative. If they have too much money in the market, in their mind, if they're feeling antsy, they want to pull some out of the market, which is a great time now because the market's high, and get it in something with no risk, something safe.
Sure.
Probably not going to earn as much interest over the years long term, but with that chunk of money, they don't have to worry about losing any of it. And the closer you get to retirement, and the higher the market gets, people worry that big chunks are going to be taken away from them, and they're repositioning their portfolio. So that's
Sure.
other people they take it with a grain of salt.
Right.
They've been through last March, they've been through '08, they've been through the early 2000s, and they have things set up where they can weather a storm like that. If you can't, if you are going to retire soon, or you're pulling a good chunk of income off your portfolio, you might not be able to weather that storm.
Right.
And if that happens, your lifestyle may have to change. And that's not good.
Sure.
That's not a good thing.
Right.
So it's family by family, investor by investor, and that's why they need to work with a professional. And even if they're a do-it-yourselfer, or they're working with a Edward Jones, or any company out there, Merrill Lynch, or I don't want to name too many, but even a bank, bank investment department, a lot of those people do a good job, but they don't know everything.
Right.
Right. So, people should get second opinions,
Sure.
and see if people like me can find any holes, or, see, is there any red flags?
Sure.
A lot of those types of advisors, they don't look at all the other stuff. They don't look at the tax planning,
Sure. Yeah. Exactly.
both current and future. They don't look to make sure the estate is set up. They're maybe not up to date on the beneficiaries of their investments. Have they been updated? Have grandkids been added? Has someone got divorced? Have someone, in a rocky relationship where they got to start watching things? Whatever the case, most folks like that, those types of advisors, they're just, they do a good job handling the money, but it stops there in many cases because it's really not their job. Their job is to invest the money. It's a certified financial planner's job to cover all the bases.
Okay.
It's a big difference. And when somebody starts working with a CFP, an independent one, one that doesn't have to answer to anyone, but the regulatory boards, it's a lot of times it's a different experience.
Sure.
And they just get a lot more value for what they're already paying another advisor. It's just added value.
Right, because you do what these other guys do, plus what you were just referring to.
Correct. And some of the other guys do, guys and girls, but most don't. They don't do the full financial planning experience.
Right.
It just doesn't happen.
And you help families go through that process so that when things change, because that's what life is, it's full of change.
It's absolutely. In the years, the market a year ago is different than today. So should we have the same approach today as we did a year ago or 2 years ago?
Right.
That all has to be worked through.
Right.
And spouses have to agree.
Sure.
They have to know, well, why do we have this account over here? Why is it invested that way? A lot of people don't know. I don't know. That's where the broker put me. Really? that's
the answer.
80% of the time. That's the case.
Right.
But they should know why they have this account and that account, and do they need money safe? Right? Do they want money safe? How much should they have safe? Or should it all be in the markets?
Right.
And if it's in the market, any of it, how risky do they want to be with it? And that's just the investing portion. Again, there's other
Right.
areas of financial planning, estate planning, tax planning, income planning. I mean, it's all part of a full financial plan.
And that's what your help families do. There's a lot of folks that can help you invest your money well and make money. You help a family put together, first thing that I hear is peace of mind.
Peace of mind and understanding. Why are they doing what they're doing with their money? Both spouses. 'Cause
Sure.
one isn't going to be around at some point.
Right.
So the other needs to know what's been happening and why. If someone comes to me, Wayne, I got $500,000 or I have 100,000, just, tell me where to invest it. I don't do it. They got to go through the processes.
Sure.
I have to do my due diligence. I have to know my client before I could ever make any recommendation.
Sure.
And they should know why the money's going where it's at and the purpose of it. Not leave it up to me just to pick certain things. So,
Right.
And most other places aren't like that. You want to give them a check for $100,000 or whatever, they're going to take it. No matter how much time the client wants to spend with them. If the client's busy and everything, they'll say, yeah, give me your check and they'll invest it.
Right.
Doesn't happen with me.
Yeah, and never mind. I mean, say they take the commission and say, hey, that was great.
Well, there's fee-based people that do that too,
Sure.
right? And it's just the way it is. It's like
Right.
any car dealer, any place to go shop, any doctor, any attorney, they all work differently. You just got to find someone you're comfortable with.
Sure, and that's one of the things that you can do with Wayne. Pick up the phone at 866-626-3990. Make an appointment, go in, sit down with Wayne, and go to the website, todaysretirees.com, todaysretirees.com. You'll find a lot of information. You can watch past programs there, but we are out of time for today's program. We'll see you the next time.
Thanks for tuning in to Today's Retirees with certified financial planner Wayne Maslyk of Great Lakes Benefits and Wealth Management. Visit todaysretirees.com or call 866-626-3990 to schedule a no-cost appointment with Wayne. Today's Retirees is brought to you by Great Lakes Benefits and Wealth Management, family-focused retirement and tax planning services, anchored in family values. Information and opinions discussed on Today's Retirees do not necessarily reflect the opinions of this station. Opinions expressed should not be substituted for individualized consultation with a qualified financial advisor. For specific information, call 866-626-3990 or visit todaysretirees.com.
A certified financial planner is a true professional, a well-rounded, holistic planner that helps you in all areas of your financial life. Estate planning, tax planning, financial planning, insurance planning. We have to sit for a 10-hour, 2-day exam, at least back when I took the test. It's not just a weekend designation where you go somewhere for a couple days, pay a couple $100, and now you have letters behind your name. One thing I think is important is that you try and find a independent certified financial planner. Somebody that doesn't work for a big firm. I myself own my company, Great Lakes Benefits and Wealth Management. The buck stops with me, an independent, certified financial planner, one of the only ones on the north coast of Ohio.